What's up, everybody? Welcome to another edition of Dave's Daily Dives. Here with you, as always, I'm the bearded boy wonder, Dave Bartosiak. Today, my friends, got a lot to cover. Not only are we going to go through a few of these charts, including the S&P 500, the Russell, the NASDAQ, I definitely want to take a look at the yen and the carry trade, what that impact has been over on gold prices, but it's not going to stop there because then I'm digging in. And I've got 5 Zacks Rank #1 strong buys that are breaking out to new highs. So you're not going to want to miss that. But first, my friends, it's all about the S&P. We've had these levels up here with the Fibonacci retracement levels, found support, basically twice found support. And then now, what I want to tell everybody is don't wait for the breakout from all-time highs. The breakout was the breakout from this downward channel and the breakout from the 50-day moving average. Coincided with the commodity channel index going from oversold -100, in fact, -160 it looks like, crossing over the zero line. Big move there. There's the buy signal, and it's off to the races. So don't wait for the breakout of 2,400 of the all-time highs. I think it happens sooner rather than later. Although there is some risk that this week there was a sort of buy the rumor, sell the news event taking place with regards to the overall market, with regards to the tax plan from the Donald. But if you're looking for a clue, the Russell may be this clue. Now, granted, a tax cut here in the U.S. is obviously going to benefit companies that get the vast majority of their revenues from the U.S. So when you're thinking that, you got to think small caps. And I think that's why these guys have been rallying so much. And again, didn't wait for the breakout from the all-time highs, rather the breakout from this downward trend channel. It's the same thing that happened here in November. Once it broke the downward trend, it was off to the races. Okay? So that's how you got to look at this. Broke the downward trend, off to the races, and now all-time highs, of course. Great day. Similar scenario. Commodity channel index goes from oversold, crosses over the zero line, and you are off and running. Now, what about that NASDAQ? Now, the NASDAQ has been the strongest of all these major market indexes. This is a little different pattern. This is just a huge sort of wedge. We were tucked underneath this sort of 6,000 level, essentially, if I get 59.30, right? Bumped up against it, found resistance there, and sure enough, has broken on through to the other side. So we've got a nice little boost in the arm there, shot in the arm. So you see the higher beta indexes like the NASDAQ and the Russell that are breaking on through, and now the rest of the market is following it. Part of this has to do with the carry trade here. I'm talking on the dollar yen. So big move here from the November lows to the December highs. I'm going to draw my fibs here. The 61.8. Now I guess before I kind of glance over this wick down is where I put the bottom end of this fib, because I feel like putting it down here, there was some other action that took place. Literally, I think this wick down is what most of the market's going to be looking at. And if you look on the way down, that wick down, lots of W's, set the stage for this 38.2% retracement level to provide some support in the near term in February, bounced again in February, and then all of a sudden that 23.6 comes into play, down to the 50, then there's resistance at the 38.2, down to the 61.8, broke through the 50. Now that means, to me, this 38.2% retracement level at 112.17 is a screaming level of resistance for the yen. We're going to have to wait and see what happens sort of intraday, see if it gets there during the Asian session over the course of the next couple of days, or even tomorrow's session in the U.S. Kind of the wick up here, 111 in the 70s, got kind of close, ran out of gas there, and that happened just as the plan officially got announced. So a little bit of selling the news there. Does this carry on over? I don't know how many people are going to be jumping in front of this market trying to short it right now. I'm not quite sure. But overall, you're seeing the carry trade sort of come back into play, right? You're seeing the dollar appreciate against that Japanese yen. People are lending or borrowing money rather in yen terms, and we're off to the races in the market. pretty good coincidence there. A lot going on. So just want to check in real briefly with the VIX. Volatility obviously has come down pretty big over the last couple of days, and now we're back under 10. We were at 16, or now we're at 1085 rather. So back to the lows of the doldrums of volatility. Interesting stuff happening there. All right, let's go ahead and dig into the charts here. I'm going to start off with Caterpillar. Big time earnings report. You guys know Caterpillar. They do construction equipment, construction and mining equipment. I'm going to add one more indicator for us here. We've been using this commodity channel index. I want to throw in my Chaikin money flow, and apologize if I'm saying the last name wrong, but it looks like Chaikin to me. My last name is Bartosiak, so they're constantly hacking me apart. Anyway, Caterpillar, huge breakout here on the earnings front, met with commodity channel index bouncing at the zero line, really. I mean, that's what this pattern was, a little bit of a continuation here. But really, they were locked in a consolidation for a very long period of time. You're talking from October all the way through now, basically this consolidation, chopping around, get the huge gap up on earnings, and now it's starting to run a little bit. So that's Caterpillar, Zacks Rank, #1 strong buy, ticker CAT. Then you've got Chemours, or whatever you want to say it. This was a spinoff from Dow, ticker CC. And this has been a slow and steady wins the race sort of deal here. Found some support at the 50-day moving average back in January. Again, sort of flirted with that area into last week, and then now off to the races again at 52-week highs. Because of the Zacks Rank #1 strong buy rating that you have on this, that's definitely a huge shot in the arm for this over the long run in terms of EPS. You know that that's moving in the correct direction, so definitely a plus there, and money flows have been positive since the end of March, so I think you'd expect that to continue over the short run. That's Chemours, ticker CC. Now, much easier to pronounce, Inner Workings, INWK. So these guys do marketing, basically marketing execution solutions is what they say. So they have software applications and databases that help stores, that help you analyze and track your supplier network or other supplier networks and pricing and things like that. So a little bit complicated there. Obviously, I'm not here for the fundamentals of the business. I'm here for the technicals, and the technicals look pretty darn good. Up here, breaking out towards the highs. You see this big wick here on February 24th. We're inside of that area right now. If you got money flow has been positive, while the stock has gone positive as well. So that's all pretty good. A little bit concerned with the commodity channel index up over 223 right now, but it is a stock that looks like to be breaking out through to new 52-week highs, so that's a little bit of a shot in the arm there on Inner Workings. If you're not in this and you're looking to buy it, I think you could, but you got to put your stop south of, really, I mean, I'd be more comfortable south of $10. A little bit further, maybe even past this swing low, so 990, so maybe 985 would be a lot safer if you're looking at Inner Workings. Again, Zacks Rank #1 strong buy, ticker INWK. Then we got John Beam Technologies. So they're in the food and beverage transportation business, right? Food and beverage and air transportation business. So they operate through a couple of names, JBT Food Tech and JBT Aerotech. And this is a company that's been chopping up. So yesterday is actually when they made their cool 52-week high, retreated a little bit here. But overall, you do have the commodity channel index that has crossed on through that zero line. Got a little bit overbought right now, has come back to the 50-day moving average. I think I'd let this one unwind just a little bit before I was loading the boat on it. It looks like perhaps this is a false breakout in the short term, so you want to keep an eye on this. Don't get caught in this trap. But if it comes down to the 80s, I think you can definitely load the boat on it. That's John Beam Technology. John Beam, JBT. Last one is Lincoln Electric, ticker LECO. So they do welding and brazing products worldwide. I do believe it's small cap. And you could see the run here, pretty nice since election day. Retreated a little bit all the way to 81, found a bid at 81. CCI oversold at -200 at the same period of time, and money flows dipped into negative territory. Since then, pushed up on through to new highs. I think this is another breakout that you could definitely buy, but your stops would probably have to be south of the 50-day moving average here at 86 and change. So that was Lincoln Electric, ticker LECO. If you're not already hooked up, make sure you get on Twitter and subscribe to or follow at Bartosiastics, BARTOSIASTICS, so you can get my daily dive each and every day. So thanks a lot for hanging out with me here today on Dave's Daily Dive. I will see you all mañana.